Here are the crypto top headlines covered in this video. Bitcoin price weakness results from larger macroeconomic concerns. Next, an Ethereum ETF is coming sooner than you expect. Also, Binance and SEC lawyers present arguments on crypto as a security. Welcome to Crypto Top Headlines, where there's no clickbait thumbnails or titles, and no speeches on my opinions, just bringing crypto's news to you. We are a new channel here on YouTube, and would greatly appreciate it if you would click on the like and subscribe buttons, as well as the notification bell. It does help support the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline, Bitcoin price weakness results from larger macroeconomic concerns. Bitcoin price is being pressured by interest rate concerns, the spot Bitcoin ETF net outflows, and the Mt. Gox bankruptcy estate process. Bitcoin price traded below $39,000 for the first time in over 50 days on January 23rd. The downturn movement initiated on January 11th, coinciding with the U.S. Securities and Exchange Commission approval of the spot Bitcoin ETF. The 17.5% correction in the 12 days leading to January 23 triggered an aggregate $385 million liquidation in long futures BTC contracts. The U.S. economy now favors the stock market relative to Bitcoin. From a macroeconomic perspective, 2024 marked a reversion in the DXY index, which measures the strength of the U.S. dollar against a basket of foreign currencies, including the euro, the British pound, and the Japanese yen. After trading at $100.80 on December 28, 2023, its lowest level in more than 5 months, the U.S. dollar gained momentum and the index currently hovers near $103.75. This movement suggests that investors believe that despite fiscal problems, the odds still favor the U.S. currency, at least in relative terms. Analysts and economists are now pricing higher odds for the U.S. Federal Reserve's successful strategy to curb inflation without causing an economic contraction. The one-year expectation for the U.S. moved down to 2.43% in January 2024, down from 3.09% in December 2023. Meanwhile, a recession seems out of the radar as the Conference Board Economic Forecast expects a 1.7% growth outcome for the U.S. gross domestic product in the first quarter, followed by a 2.4% growth in the second quarter. As per the FedWatch tool from CME Group, the likelihood of an interest rate cut in March dropped to 47% from 81% in the previous week. Additionally, investors now anticipate only 5 rate cuts throughout 2024, as opposed to the previous estimate of 6. New York Fed President John Williams and Atlanta Fed President Raphael Bostic conveyed that they are in no hurry to cut interest rates, even if there are no more hikes under discussion, as reported by CNBC. One could argue that the S&P 500 index is currently near its all-time high, thus the external factors impacting risk on assets should also be beneficial for Bitcoin. However, the drivers for the stock market completely differ from commodities, including cryptocurrencies. For starters, the 500 largest U.S. listed companies hoard a combined $2.6 trillion in cash positions, besides some of them generating dividends, so in a way, the sector acts as a safe haven in case of a mild recession. Bitcoin's price reflects spot ETF outflows and heightened regulatory pressure. Apart from being perceived as a risk-on asset, Bitcoin has faced problems of its own, including a net aggregate spot exchange-traded fund outflow since January 17th. In a post on the X social network, user Capital 15C reported that the total number of Bitcoin held by U.S.-listed ETFs dropped to 645,054 on January 22nd, While the $183 million outflow in 3 business days might seem small in absolute terms, it contradicts investors' expectations following the spot ETF launch. Another source of concern for Bitcoin investors seems to be the bankruptcy estate from the now defunct Mt. Gox exchange, which is expected to unlock some 142,000 BTC. Some initial payments occurred in December 2023, but the trustee is expected to pay off the creditors by October 2024. Lastly, one should not discard the negative regulatory pressure, especially in the U.S., which might not hold direct significance to Bitcoin, but potentially impact stablecoins and exchanges. On January 21st post, U.S. Senator Elizabeth Warren's post cited a report claiming that rogue nations are using crypto to dodge sanctions and undermine our national security. While the cryptocurrency community rushed to explain that fiat is the preferred currency for financial crimes, which happens to be true but does not diminish the potential negative outcome from regulatory actions and its subsequent impact on short-term prices. Let me pause here for a moment. If you're getting value out of this video, please click on the like and subscribe buttons as well as the notification bell. Our next top headline: an Ethereum ETF is coming sooner than you expect. Bitcoin ETFs were delayed because of politics. Now that we have clarity, along with 7 deadlines between May and August, Ethereum ETFs aren't far away. We finally have a Bitcoin spot ETF, an event few of us thought we would see in our careers. The industry has now turned to the approval of an Ether spot ETF as its next target. Those gearing up for another decade of juicy headlines, though, will be disappointed. The approval of an ETH spot ETF is now not only certain, but imminent. While the United States Securities and Exchange Commission was able to spout nonsense for over 10 years in its various denials of its BTC equivalent, the watchdog can no longer hide behind diffuse objections to what is a patently clear commodity ETP filing. Indeed, as was observed by Commissioner Hester Peirce in her damning indictment of the SEC's conduct over this approval published on January 10th, the denials of these applications never made sense. Rather than follow what was always a very clear process for these products, the regulator denied applications based only on prejudice against Bitcoin, a prejudice that was only finally ended by Grayscale's lawsuit. The result, as Peirce observed, has not only been the erosion of trust in the SEC, but a circus around these crypto products that would otherwise not have been witnessed, a fact to which the $1 billion of assets now sitting in BlackRock's BTC spot ETF can attest. Such a circus will not be seen around an Ether ETF. Currently, there are 7 ETH spot ETF applications sitting on the SEC's desk. This time, Van Eck is the first in line with a deadline of May 23, 2024. The deadline for BlackRock's application is in August, but while typically we would expect the largest asset manager to dictate the terms of the approval, the securities watchdog has already instituted proceedings on Van Eck's applications. As such, it would have to come up with an awfully good reason for a denial, which would have a knock-on effect on other pending applications. This is why the market appears so certain that an approval is coming in May. And this will not be the result for just an ETH product either. The path has now been cleared for any kind of crypto-backed or linked ETP, from spot products to more complex instruments like structured products, all linked to digital assets. As a really long shot, the only potential obstacle in the way of a spot ETH approval is liquidity. Just as the size and scale of the market was a concern for a Bitcoin spot product, it will be even more so for Ethereum, whose move to proof of stake has further constrained the supply of ETH. Moreover, while BTC now used almost purely as a store of value can be held long-term inside large investment funds, ETH is a working currency used to pay for ever-growing numbers of transactions on the highly composable chain. This and this only may throw a spanner in the works for the world's second biggest cryptocurrency when it comes to a spot ETF approval, but it truly is an outside chance. Indeed, the same argument could be applied to equities, and it never is. The liquidity issue will continue to plague almost all markets as these mega ETP funds soak up assets from the pensions, savings of an aging global population, and solutions will continue to be found. Right now, in fact, we are seeing a lot of Bitcoin flowing into Coinbase wallets, which is almost certainly whales doing over-the-counter or OTC deals to satisfy institutional demand. The question of whether ETH is a security is also null and void, as once it becomes an ETF, it becomes a security. And we already have commodity ETFs, lots of them. The reason it took 10 years for a Bitcoin ETF to be approved was politics, plain and simple. The SEC was neither sure or ready to be sure until the asset managers were sure and ready to be sure that this new asset class should be allowed through the door. We now have clarity on this. With the approval of the BTC Spot ETF, cryptocurrency is not only through TradFi's hallowed door, but sitting firmly at its table. Now, more than the approval of a spot ETH ETF, we can prepare for the full-scale institutional colonization of the cryptocurrency industry. Our next top headline, Binance and SEC lawyers present arguments on crypto as a security. Judge Amy Berman Jackson said she would take a joint motion from Binance and Binance.us to dismiss under advisement following arguments on whether certain tokens were securities. Lawyers representing cryptocurrency exchange Binance in a lawsuit brought by the United States Securities and Exchange Commission called on a judge to dismiss the case after arguing whether specific tokens qualified as securities. In a January 22nd hearing in U.S. District Court for the District of Columbia, Binance's legal team presented arguments on how the SEC treated cryptocurrencies under current regulatory and legal frameworks. According to a Reuters report, a Binance lawyer said the SEC was taking a contradictory approach to crypto firms, telling the industry to come in and register, while simultaneously, with their other hand, holding the door closed and preventing any viable path to do that. Reports from the courtroom suggested the SEC said the Howey test for securities was clear for all assets, including crypto, and regulators were not obligated to warn firms that they could be violating securities laws. Judge Amy Berman Jackson reportedly said she would take the SEC's and Binance's arguments under advisement. It seems like you are trying to say that all digital assets at the end of the day have the earmark of securities, Judge Jackson reportedly said to the SEC's legal team. If you are not, where is the boundary of what you are saying? The SEC versus Binance case could have significant implications for crypto firms operating in the United States. Many companies have claimed authorities do not offer a clear regulatory framework for legally operating, leading to enforcement actions against major firms including Binance, Coinbase, Ripple, and Kraken. Binance, Binance.us, and former Binance CEO Changpeng Zhao announced a settlement with the U.S. Justice Department, Treasury Department, and Commodity Futures Trading Commission in November 2023 for $4.3 billion. Zhao pleaded guilty to one felony charge as part of the settlement and will be sentenced on February 23rd. The January 22nd hearing was initially scheduled for January 19th, but was delayed due to weather. Cointelegraph reached out to Binance's legal team, but did not receive a response at the time of publication. So this concludes our top headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons, as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.